Hello, and welcome to this week's edition of Checks and Balances TV. Today's program is entitled, The Taxman Cometh, but don't pay a penny more than you have to this year. So let's see how today's news may impact your financial future. The end of the year is quickly approaching, and with it comes the expiration of a few key tax breaks that were put into effect by the Tax Relief, Unemployment Insurance Re-authorization, and Job Creation Act of 2010. But now Congress must vote whether or not they want to extend these benefits for 2012. But with the Congressional Supercommittee failing to come to an agreement on a deficit reduction plan before the November 23rd deadline, no one knows what to expect from Congress for 2012. And with the failure of the bipartisan Joint Select Committee on Deficit Reduction to cut out anything from our national budget, will Congress be able to come to an agreement on these temporary tax breaks? Well, only time will tell. Okay, so what's really going on here? Let's check the facts using our checks and balances process. Nearly 1 year ago, payroll tax cuts were put into place by Congress in an effort to stimulate the economy. Payroll taxes fund Social Security and were cut 2% from 6.2% to 4.2% for employees as a part of the 2010 Tax Relief Act. According to the Center on Budget and Policy Priorities, the payroll tax cut gives about $934 per year to the average worker, but is set to expire at the end of this year. President Obama proposed extending and expanding this cut in 2012 as part of the American Jobs Act back in September, which called for the tax rate to drop even further to 3.1% for both employees and employers. The payroll tax cut was only one part of this act that was signed into law last December. Other key benefits of the act included extensions of unemployment insurance, the child tax credit, the earned income tax credit, and renewable energy grants. Unemployment benefits are offered by most states for only 26 weeks, but the extension reinstated the Emergency Unemployment Compensation Program, which extends these benefits for up to 13 months. The child tax credit of $500 per child under the age of 17 in 2011 was increased to $1,000 for taxpayers who meet certain criteria. The earned income tax credit is worth an average of $600 for families with 3 or more children, and the renewable energy grants reimburse eligible business owners who install a specific energy product such as solar power. Many of these tax breaks, however, will disappear in 2012 unless Congress votes to extend them. Okay, so now that we've checked the facts, let's balance this news using our checks and balances process to determine what action you should take today. Extending the payroll tax cut in its current form through 2012 is expected to cost the government $120 billion. And combined with the extension of emergency unemployment insurance, that number rises to $200 billion. Increasing our country's spending is obviously not what Congress should be focused on right now, especially when the goal of the Supercommittee was to agree upon $1.2 trillion in spending cuts and possible tax increases. At the same time, however, the backlash that could occur from raising payroll taxes or eliminating long-term unemployment benefits could be substantial. Since the payroll tax cut and emergency unemployment insurance are both expected to be extended, the big question then becomes what tax cuts and benefits will expire heading into 2012? Well, with the Supercommittee failing to come up with a deficit reduction plan, automatic spending cuts will be triggered on January 15, 2012, but will not take effect until 2013. That means that broad tax reform will likely not take place next year, and dozens of current tax breaks will be extended as part of another temporary solution. The bigger issue, though, revolves around what spending cuts will actually be forced upon us, which now must be equally split between defense and select domestic programs. Those automatic cuts will be the subject of much political debate over the next year, leading up to the 2012 presidential election. Okay, so what's the bottom line here? The Supercommittee was formed as a result of the Budget Control Act of 2011, which raised the debt ceiling $400 billion in August the 2nd. Unfortunately, the federal deficit passed the $15 trillion mark last month, and the new debt ceiling of $15.2 trillion is expected to be hit sometime in January. Debt continues to pile up due to ongoing spending, and it looks like next year will be more of the same. In 2012, most Americans will likely have the same benefits they had in 2011, which means that retirees will not see cuts to programs like Social Security or Medicaid, which is good news. And if there is a silver lining in the failure of the Super Committee, it's that people will probably not have to worry about tax increases or benefit cuts at all until this time next year, when we'll most likely go through it all over again. And now for Matt's weekly financial tip, tool, or technique. There is less than a month left in 2011. And while we all must pay our taxes, there is nothing patriotic about overpaying your taxes. Many valuable tax breaks are available, so review the Internal Revenue Service's website at irs.gov to find out more information about reducing your tax liability. For now, though, here are 4 tax-saving tips to help you take advantage of year-end tax planning. Tip number 1, review all possible deductions and exemptions. There are a number of different deductions you can take, covering everything from medical costs to educational expenses. However, keep in mind that to claim medical costs as an itemized deduction, they must total more than 7.5% of your adjusted gross income. And miscellaneous itemized deductions must be over 2%. You can also gift up to $13,000 in 2011 to anyone you'd like to without incurring federal gift tax, or up to $5 million this year if you want to use up your lifetime gift exclusion. Tip number 2, find out if you qualify for any tax credits. Like deductions and exemptions, there are a variety of tax credits offered by the federal government to minimize the taxes you owe. The Child Tax Credit and the Earned Income Tax Credit are 2 credits that were extended through the end of 2012 as part of the Tax Relief, Unemployment Insurance Re-authorization and Job Creation Act of 2010. Tip number 3 is donate to charity. Charitable donations are great last-minute deductions that can be made by December 31st. Charitable IRA distributions are another incredible tax break for those who are over the age of 70 and a half. If the distribution is made directly to a qualified charitable organization and does not exceed $100,000 this year, the withdrawal is not taxable and qualifies as a required minimum distribution for the owner. And tip number 4 is estimate what you will owe. Taxes, of course, are not due until April 17th of next year, giving you plenty of time to plan ahead and budget accordingly. Estimating what you will owe in advance can help you set aside enough money each month and avoid the need to come up with all the funds at one time, while keeping IRS penalties and interest charges to a minimum. While it may have been a taxing year for you this year, these are just a few ideas to help you minimize what you will end up owing. If you have any questions about what type of deductions or credits you may qualify for, be sure to contact a tax professional who can help you figure out how to keep more of your money in your pocket this year. Be sure to log on to our website and download our featured report, The Truth About Taxes, a free report that reveals the many ways you can legally reduce the taxes you may be paying currently. And finally, remember that only you can control your financial future. You can succeed. You just need confidence and determination. I'm Matthew J. Reddick from Checks and Balances TV. Until next week, dump debt, invest wisely, believe in yourself, and make it happen.